वेलकम टू वीलन में आपका स्वागत है। सब्जेक्ट एडवांस्ड कॉस्ट अकाउंटिंग, सेशन नंबर 8। टॉपिक कवर्ड इन दिस सेशन: कॉस्ट एलोकेशन, कस्टमर प्रॉफिटेबिलिटी एनालिसिस एंड सर्विस sales variance analysis, provide additional information about the sales volume variance by calculating the sales mix variance and the sales quantity variance. Now, purpose of cost allocation. There are so many purposes of cost allocation. देखिए, कॉस्ट एलोकेशन के बहुत सारे पर्पज होते हैं, क्योंकि कोई भी कॉस्ट अकाउंटेंट, कोई भी ऑर्गेनाइजेशन ये जानना चाहता है कि पर यूनिट कितनी कॉस्ट चार्ज हुई, एक यूनिट कितनी कॉस्ट में तैयार हो रहा है, और इसको जानने के लिए हमें कॉस्ट का एलोकेशन करना आवश्यक होता है। और इसके और कुछ दूसरे कारण इस तरह से हैं। नंबर 1, टू प्रोवाइड इंफॉर्मेशन फॉर इकोनॉमिक डिसीजन। इकोनॉमिक डिसीजन के लिए इंफॉर्मेशन प्रोवाइड होती हैं इससे। टू मोटिवेट मैनेजर्स एंड अदर एम्प्लॉइज टू जस्टिफाई कॉस्ट और कंप्यूट रीइंबर्समेंट एंड टू मेजर्स, इट इज अ लास्ट पॉइंट, टू मेजर्स इनकम एंड एसेट्स फॉर रिपोर्टिंग टू एक्सटर्नल पार्टीज। तो ये 4 पर्पज होते हैं हमारे कॉस्ट एलोकेशन के। एंड नाउ क्राइटेरिया टू गाइड कॉस्ट एलोकेशन डिसीजन, कि किस तरह से एलोकेशन हमें करना चाहिए। कॉजेज एंड इफेक्ट, यूजिंग दिस क्राइटेरियन मैनेजर्स आइडेंटिफाई द वेरिएबल और वेरिएबल्स दैट कॉज रिसोर्सेज टू बी कंज्यूम्ड। बेनिफिट्स क्या होते हैं? बेनिफिट्स रिसीव्ड, यूजिंग दिस क्राइटेरिया मैनेजर्स आइडेंटिफाई द बेनिफिशियरीज ऑफ द आउटपुट्स ऑफ द कॉस्ट ऑब्जेक्ट्स। फेयरनेस और इक्विटी, दिस क्राइटेरियन इज often seated on government contracts when cost allocations are the basis for establishing a price satisfactory to the government and its suppliers. Ability to bear, this criterion advocates allocating cost in proportion to the cost object's ability to bear them, कि जिसकी जितनी क्षमता है उसके अकॉर्डिंग हम एलोकेट कर देते हैं। नाउ रोल ऑफ डोमिनेंट क्राइटेरिया, the cause and effect and the benefits received criteria guide most decisions related to cost allocation. Fairness and ability to bear are less frequently used. Role of dominant criteria, fairness is an especially difficult criterion to obtain agreement on. The ability to bear criterion raises issues related to cross subsidization across users of the resources in an organization. Cost allocation and costing system example: Smith Corporations manufactures clothes, washers and dryers in 2 divisions. Clothes washer divisions in Canton, CWD. Clothes dryer division in Dayton, CDD. And corporate costs are as follows: like treasury rupees 6 lakh, human resources 12 lakh, administrations 48 lakhs. Treasury cost is interest to finance equipment, acquisition of rupees 40 lakhs in Canton and rupees 20 lakhs in Dayton. Now division cost for Canton and Deton. Direct cost 22 lakh for Canton, 40 lakh for Deton. Indirect cost 19 lakh 80,000 for Canton and 25 lakhs for Deton. Total cost 41 lakh 80,000 for Canton and 65 lakh for Deton. If Smith Corporation allocates corporate cost to divisions, how many cost pools should it use to allocate corporate cost? On single cost pool, numerous individual corporate cost pools. A key factor is the concept of homogeneity. Which allocation basis should Smith Corporation use to allocate treasury cost? Treasury cost rupees 6 lakh. Canton divisions 6 lakh multiply 40 lakh divided by 60 lakh, which is equal to 4 lakh. Denton division 6 lakh multiply 20 lakh divided by 60 lakh, which is equal to 2 lakh. Smith Corporation allocates human resources on the basis of total direct labor cost incurred in each division. Suppose direct labor cost in cantons are rupees 12 lakh and rupees 18 lakh in Denton. How does Smith Corporation allocate its rupees 12 lakh of human resource cost? Canton division, rupees 12 lakh multiply 12 lakh divided by 30 lakh, which is equal to 4 lakh 80,000. Deton divisions, rupees 12 lakh multiply 18 lakh divided by 30 lakh, which is equal to 7 lakh 20,000. Smith does not allocate corporate administration cost to the division. So, कॉस्ट एलोकेशन एंड कॉस्ट सिस्टम एग्जाम्पल के तौर पर ट्रेजरी कॉस्ट 6 lakh divided in the ratio of 2/3 and 1/3 in Canton and Deton, which is equal to 4 lakh for Canton and 2 lakh for Deton. Human resource cost, total cost 12 lakh, 40% for Canton, which is equal to 4 lakh 80,000, and 60% for Deton, which is equal to 7 lakh 20,000. Total allocated cost to division 8 lakh 80,000 for Canton and 9 lakh 20,000 for Deton. Treasury costs are reallocated by the division to assembly. Human resources costs are reallocated by the division to the Department of Human Resources. Canton division, like this one. Assembly direct cost 13 lakh, corporate cost 4 lakh, total cost 17,000. Finishing direct cost rupees 9 lakh. Canton division, human resource direct cost 16 lakh 80,000, corporate cost 4 lakh 80,000, total cost 21 lakh 60,000, and maintenance direct cost 3 lakh. So, assembly department rupees 17 lakh, finishing department rupees 9 lakh, Canton division 5 lakh 60,000, maintenance department 3 lakh, human resource department 21 lakh 60,000. And now customer revenues analysis example. During the first 6 months of 2003, English Languages Institute expanded its market and sold 200 composition programs to two new customers in Mexico. Customers A is in Tejona and customer B is in Guadalajara. Then program sold for customer A 140, customer B 60, list selling price rupees 185 and 185, invoice price 175 for A and 180 for B. Total revenue earned 24,500 for A and 10,800 from B. What explanations can be given for these revenue differences? Number 1, the volume of programs purchased. Number 2, the magnitude of price discounting. Now, customers cost analysis example. Assume that English Language Institute has an activity-based costing system that focuses on customers rather than product. So, activity areas are order taking, cost driver and rate rupees 80 per purchase, order setup rupees 100 per batch, customer A purchase order 7, customer B 2, customer A batch 7 and customer B batch 2. What is the cost of servicing each customer? Customer A ordering 7 into rupees 80 per order, which is equal to 560, and setup for customer A 7 into rupees 100 per batch, which is equal to 700, and total cost 1260. English can use this information to persuade this customer to reduce usage of the ordering and setup cost drivers. For customer B analysis, ordering 2 into 80 per order, which is equal to 160, setup 2 into rupees 100, which is equal to 200, total 360. And now cost hierarchy. General Motors uses a 7-level cost hierarchy to analyze profitability. The aim of this cost hierarchy is to assign cost to the lowest level of the hierarchy at which they can be identified. Cost hierarchy. Point number 1, enterprise related activities. Number 2, market related activities. Number 3, channel related activities. Number 4, customer related activities. Number 5, order related activities. Number 6, parts related activities. And number 7, direct material. These are the activity of cost hierarchy. Now, customer profitability profiles. Which customer is more profitable, A or B? For example, revenues A or from A 24,500 in last example and B rupees 10,800. Cost of goods sold rupees 95 per unit, which is equal to 13,300 for A and 5,700 for B. Contribution margin per unit or total contribution margin 1100 to 11,200 for A and 5,100 for B. Other expenses 1,260 for A and 360 for B. So operating income 9,940 from A and 4,740 from B. Customer A seems to be more profitable. However, customer B has a higher gross profit percentage. As customer A has gross profit of 40.6%, which is equal to 9,940 divided by 24,500 multiplied by 100. And customer B has a gross profit of 43.9%, which is calculated as 4,740 divided by 10,800 multiply by 100, which is equal to 43.9%. Now sales volume variance components. The following information relates to English Languages Institute budgets for the year 2003. Selling price per unit ग्रामर के लिए 259 रुपीज़, ट्रांसलेशन की बुक है 87 रुपीज़ की, एंड कंप्यूटर की बुक है 185 की. और कंपोजिशन, सो वेरिएबल कॉस्ट 189 फॉर ग्रामर, 50 फॉर ट्रांसलेशन एंड 95 फॉर कंपोजिशन. कंट्रीब्यूशन मार्जिन पर यूनिट 70 फ्रॉम ग्रामर, 37 फ्रॉम ट्रांसलेशन एंड 90 फ्रॉम कंपोजिशन. So, contribution margin as per the product, grammar 70, translation 37 and composition 90. Multiply by the unit, 3185 from grammar, 980 from translation, 735 for composition book. Total amount earned 70 multiply 3185, which is equal to 2,22,950 for grammar book. Translation 37 multiply 980, 36,260, and for composition 735 multiply 90, which is equal to 66,150. Sales mix, 65% of total sales mix for grammar, 20% of translations and 15% of composition. Then total budgeted contribution margin equal to 3,25,360. The following are the actual results for English language for the year 2003. Selling product grammar 255, translation 85, and composition rupees 185. Variable cost for grammar 180, translation 45, and composition book 95. Contribution margin 75 for grammar, 40 for translation, 90 for composition. Contribution margin, grammar 75, translation 40, composition 90, and unit sold 2880 for grammar, 990 for translation, 630 for composition. Total amount 2,16,000 for grammar, 39,600 for translation, and 56,700 for composition. Sales mix 64% for grammar, 22% for translation, and 14% for composition. Total actual contribution margin 3,12,300. Now static budget variance. Product, grammar, translation, composition. Actual result 2,16,000. Static budgeted amount 2,22,950. Static budget variance 6,950 unfavorable. Translation actual 39,600. Static budgeted amount 36,260 and static budgeted variance 3,340, which is favorable. Then composition actual 56,700, static budget amount 66,150 and static budget variance 9,450, which is unfavorable. So total actual result 3,12,300, static budgeted amount 3,25,360 and static budget variance 13,060 is unfavorable. Now grammar actual contribution margin per unit rupees 70 for grammar, 40 for translation, 90 for composition, unit volume 2880 for grammar, 990 for translation, and 630 for composition. Actual results 2,16,000 for grammar, 39,600 for translation, and 56,700 for composition. Budget grammar, flexible budget variance, grammar rupees 70 contribution, actual unit volume 2880, flexible budget 2,01,600. Translation contribution per unit 37 rupees, actual unit volume 990, flexible budget 36,630. Composition rupees 90, actual unit volume 630, flexible budget 56,700. Variance grammar actual results 2,16,000, flexible budget 2,01,600, flexible budget variance 14,400 favorable. Translation 39,600 actual results, flexible budget amount 36,630, and flexible budget variance rupees 2,970 favorable. Composition actual results 56,700, flexible budget amount 56,700, and flexible budget variance is 0. So total flexible budget variance equal to rupees 17,370 flexible, 370 favorable. And now sales volume variance. Grammar actual budget 2880 minus 3185 multiply 70, which is equal to rupees 21,350 unfavorable. Translation actual budget 990 minus 980 multiply rupees 37, which is equal to 370 favorable. Composition 630 minus 735 multiply rupees 90, which is equal to 9,450 unfavorable. So total sales volume variance 30,430 unfavorable. And now sales mix variance. Sales mix variance equal to actual unit of all products sold multiply actual sales mix percentage minus budgeted sales mix percentage multiply budgeted contribution margin per unit. So sales mix variance for grammar 4,500 brackets 0.64 minus 0.65 multiply rupees 70, which is equal to 3,150 unfavorable. For translation book 4,500 brackets 0.22 minus 0.20 multiply rupees 37, which is equal to 3,330 favorable. For composition 4,500 brackets 0.14 minus 0.15 multiply rupees 90, which is equal to 4,050 unfavorable. Total various sales mix variance equal to 3,870 unfavorable. And now sales quantity variance. Sales quantity variance equal to actual unit of all products sold minus budgeted unit of all products sold multiply budgeted sales mix percentage multiply budgeted contribution margin per unit. So sales quantity variance for grammar books 4,500 minus 4,900 multiply 0.65 into rupees 70, which is equal to 18,200 unfavorable. And for the translation 4,500 minus 4,900 multiply 0.20 multiply rupees 37, which is equal to rupees 2,000 960 unfavorable. For composition, 4500 minus 4900 multiply 0.15 multiply rupees 90, which is equal to 5400 unfavorable. Total sales quantity variance equal to rupees 26,560 unfavorable. Now market share variance example. Assume that English Language Institute drives its total unit sales budget for 2003 from a management estimate of a 20% market shares and a total industry sales forecast by Desert Services of 24,500 units in the region. In 2003, Desert Services reported actual industry sale of 28,125 units. So what is English actual market share, which is equal to 4,500 divided by 28,125, which is equal to 0.16. Budgeted total contribution margin is rupees 3,25,360. Budgeted number of units is 4,900. What is the budgeted average contribution margin per unit, which is equal to 3,25,360 divided by 4,900, which is equal to rupees 66.40 per unit. Market share variance example. What is the market share variance, which is equal to actual market size in units multiply actual market shares minus budgeted market share multiply budgeted contribution margin per composition unit for budgeted mix, which is equal to 28,125 brackets 0.16 minus 0.20 bracket close multiply rupees 66.40, which is equal to rupees 74,700 unfavorable. Market share variance. Actual market size multiply actual market share multiply budgeted average contribution margin per unit, which is equal to 28,125 into 0.16 into rupees 66.40, which is equal to 2,98,800. Actual market size multiply budgeted market shares multiply budgeted average contribution margin per unit, which is equal to 28,125 multiply 0.20 multiply 66.40, which is equal to 3,73,500. Rupees 3,73,500 minus 2,98,800, which is equal to rupees 74,700 unfavorable. Now market size variance equal to actual market size in units minus budgeted market size in units multiply budgeted market shares multiply budgeted contribution margin per composite unit for budgeted mix, which is equal to 28,125 minus 24,500 multiply 0.20 multiply rupees 66.40, which is equal to 48,140 favorable. Actual market size multiply budgeted market share multiply budgeted average contribution margin per unit, which is equal to 28,125 multiply 0.20 multiply rupees 66.40, which is equal to rupees 373.50. Static budgeted market size multiply budgeted market share multiply budgeted average contribution margin per unit, which is equal to 24,500 multiply 0.20 multiply rupees 66.40, which is equal to 3,25,360. This implies by 3,73,500 minus 3,25,360, which is equal to rupees 48,140 favorable. And now summary of variance. Level 1 static budget variance 13,060 unfavorable. Flexible budget variance 17,370 favorable. Sales volume variance rupees 30,430 unfavorable. Sales volume variance rupees 30,430 unfavorable. Sales mix variance rupees 3,870 unfavorable. Sales quantity variance rupees 26,560 unfavorable. Sales quantity variance 26,560 unfavorable. Market share variance level 4 rupees 74,700 unfavorable. Market size variance equal to rupees 48,140 favorable. And now do it yourself. What is standard costing? How it is used? And question number 2, what is variance analysis? How they are important? And that's it from session number 7. Thank you.